showed a quarterly survey of about 10,000 companies that confidence had dipped compared to the previous 3 months. Japanese shares hit 11-week lows. The Nikkei share average declined by 2.2%. The Hong Kong market was shut due to a national holiday. Chinese stocks slid on the back of poorer than expected factory surveys. The surveys also showed a slowdown in Chinese exports. And of course, China is set to be negatively affected should the US import tariffs kick in on the 6th of July. The Shanghai Composite Index plunged 2.5%. And over in the United States, last Friday, Wall Street stocks surged on the back of a good run by Nike and banking stocks. The Dow Jones Industrial Average rose 0.24%. The S&P 500 gained 0.09%, while the Nasdaq Composite Index rose by the same margin. Global markets are in risk-off mode today as they anticipate the impact of pending trade tariffs. The US is set to start levying on billions worth of Chinese products come this Friday. The euro has taken a hit on a lack of meeting of minds about how Europe should deal with the migration crisis. And commodity prices are also having a bad day. Let's take a look at the indicators. Well, I'm joined by Bright Khumalo, who's standing by for us at the JSC. Bright, thanks very much for joining us as always. The practical effect of the trade war will likely begin from this Friday. Is this why we're seeing blood on the market floor today?
Well, I'm not sure that's the reason why we're seeing blood, Nompu. But basically, the reason why I say that is because markets are, they anticipate things. And because the news was out already that these trade tariffs are inevitable, it was already priced in the markets. I think there's other things that are involved here. For example, like lower commodities prices that we're seeing currently, the likes of Glencore down a lot today. And to be fair, if you look at the South African market itself, we did very well on Thursday and Friday, and some people were calling it window dressing. But I'll take any returns at this point, even if it's window dressing. Thank you very much.
But today, of course, even though the South African markets did very well, they're also down in line with global markets. Is that just following the herd, or are there any particular reasons for that?
So, I mean, I'm sure you've seen this trend. There's been a risk off in terms of, people, international investors are selling emerging markets as a whole. It's not just South Africa, so it's, Brazil, Argentina, Turkey. And the fact that, the elections in the likes of Mexico and in Turkey as well, they're not helping the situation. I mean, you look at Erdogan, he's been a leader for 15 years there and he's extending his term there. He's not helping the market. But the positive, I guess, that we can draw from that is that there's more certainty. Well, I guess not certainty, but there's more clarity on what's happening in the political front, both in Mexico and in Turkey. Whereas here locally at home, there's still a lot of uncertainty. We still don't know what's going to happen next year, but we still stay positive and still invested in the markets. Absolutely.
So, Bright, I see today's global PMIs, the Purchasing Managers Indexes, which basically tell us about the future or how the future of the manufacturing sector looks. They've all come out not so good, including our very own, the ABSA report that came out today. Is that partly because people are factoring in the trade wars and what it could mean for their manufacturing? Because obviously, if trade wars do kick in, it means people may not get as much demand for their manufactured goods as they did before.
Of course, I mean, in the interim, it will hinder on demand because there'll be additional costs to make the same trade that's incorporated in the prices of these goods and services. But going forward, it should again approach a more equilibrium, where buyers and sellers agree at a certain price, and it shouldn't hinge much on trade going forward. But in the interim, definitely there will be instability, and it will affect directly that PMI number globally, especially in the US and China. And basically the sectors that will be affected the most are industrials, your commodity sectors, which are the biggest import in terms of, cross continents.
Right, we're beginning to run out of time, but I want us to look at ABSA. So there was an announcement last week that they're shaking up their management positions quite a lot. They've given out lots of voluntary severance packages, bringing down their management quite substantially. Serious cost cutting taking place there. What does that speak to? How have they been performing as a bank relative to the other banks?
Yes, so you look at ABSA's, the division you're actually referring to is the retail and, business banking. If you look at that division alone, in the past year, it actually grew by 1%. So I think that it's Charlie Munger who said that, if you're playing poker and you don't see who the sucker is in the table, you're probably the sucker. And Maria Ramos has realized this, and she's doing something about it, which is good. And like you said, they've cut executives by half in terms of, headcount. And what I like about them in terms of doing something about it is that, they're introducing new products like supporting, female entrepreneurs. But the sad thing is, I think it's a bit too late. I guess it's never too late, because most of their business, you ask yourself, well, FNB is still growing, Nedbank is still growing their retail division as well, and Capitec, there was no Capitec before 2001, and 2002 you have this company that's growing like crazy till today, and you ask yourself, where are they getting these retail clients? And now we have our answer here. They've been taking them from ABSA mostly, and hopefully Maria Ramos and team, they're successful going forward in trying to fight back.
Yeah, well, we'll watch this space. Thanks very much, Bright. We've pretty much run out of time. That was Bright Khumalo. He's a portfolio manager at Vestac, just giving us his analysis on what's happening on both local and global markets. After a short break, more business news.